You can retire from the traditional career path sooner than you think, and you don't need magical luck or a huge inheritance to do it, because FIRE is really about making a conscious plan and sticking to it. FIRE stands for Financial Independence, Retire Early, and it's not a fantasy. It's a straightforward process of controlling spending, saving aggressively, and letting markets compound your wealth over time. If you want practical steps, you can start today rather than vague motivation. You're in the right place, and this video will break it down into clear actions. FIRE means having enough money saved and invested that work becomes optional, and you can choose how to spend your days without worrying about monthly bills. The pace depends on your income, your costs, and how long you give compound interest to work for you across years. The core idea is simple. Spend less than you earn, save the difference, and invest the difference in broad, low-cost funds. Think of FIRE as a practical equation. Reduce what you spend, grow what you invest, and let time push your wealth higher through compounding. Don't chase big hits, focus on reliable growth, low fees, and steady progress that you can repeat year after year. Consistency matters more than a sudden windfall, and small, boring steps compound into real freedom. First, figure out your actual annual expenses, not your gross salary, because your FIRE number is driven by what you actually need to live. List essentials, averages for housing, food, healthcare, and a small cushion for emergencies. Then remove optional splurges to see the real baseline. Your FIRE target comes from multiplying those annual expenses by about 25, which assumes you can safely withdraw around 4% each year. For instance, if you spend $30,000 a year, your target is roughly $750,000, which should cover ongoing costs and a buffer for market downturns. That amount gives room for taxes, healthcare, and a few years of unexpected costs without touching your principal too often. Remember, this is a rule of thumb, not a crystal ball, and you should tailor it to your tax situation and inflation expectations. Next, you need a high savings rate, and that starts with automating contributions and cutting big costs that don't add real value to your life. If you're living paycheck to paycheck, identify your biggest expense levers, like housing, transportation, and recurring subscriptions, and automate transfers so you don't miss the money. The goal is to move from wishful saving to intentional investing. You don't have to rethink every month, even when life gets busy. Put the money into low-cost index funds rather than chasing hot stocks, because most people underperform after fees and taxes unless they stay very disciplined. Keep costs as low as possible by avoiding high-fee mutual funds, front-loaded commissions, and frequent trading that eats into returns over decades. A simple, time-tested mix like 80% total stock market and 20% bonds works for many early retirees, but you can tilt toward more stocks if you're comfortable with bigger year-to-year swings. Grow your income by negotiating raises, taking on side gigs, or building skills that pay more over time, because every extra dollar compounds for decades. Automate not only savings, but also your emergency fund and insurance decisions, and keep a real emergency stash equal to 3 to 6 months of living expenses. Remember the risks. Investing early means you face sequence of returns, risk, inflation, healthcare costs, and the chance you retire before you're truly ready. So build a cushion and diversify. FIRE has variants to fit different lives. Lean FIRE focuses on cutting expenses to the bone and exiting early. Fat FIRE aims for a comfortable, richer lifestyle. And Barista FIRE lets you work part-time to cover basics while you let your investments grow. Your path depends on how much you can save, what kind of daily life you want in retirement, and how long you're willing to let your portfolio ride out market cycles. Start small, stay consistent, and if you found this helpful, like this video, subscribe to the channel, and share your FIRE plan in the comments.